Hi everyone, welcome to another episode of Logicless. People, this is the episode 2 of the weekly market recap series, and in this episode, we are going to see what happened on last week on geopolitics and how it impacted the stock market. Let's get started. On Friday the 30th, Sensex down 14570 points and Nifty is sitting at 23,151. Foreign investors sold 57,000 crores in just 13 days. That's not a typo. 13 days. The worst selling spree we have ever seen in the recent history. And gold didn't even rally, which honestly is the most shocking part of this whole week. So what actually had happened? Because this wasn't random. This wasn't just market volatility. This is a very clear chain of events that led to all of this chaos. And I'm going to connect every single dot for you today so that you can understand how the geopolitics impact the stock market and how the connections are. So let's go back to where it all started. February 28th, the US and Israel launched coordinated airstrikes on Iran. Iran's supreme leader was killed on day 1. Now, when something like this happens, markets expect retaliation, but maybe some missile strikes, some diplomatic tensions, those are the usual playbook. But Iran didn't do the usual thing. They did something far more calculated. They shut down the Strait of Hormuz. Now, if you don't know what the Strait of Hormuz is, imagine a narrow bottleneck in the ocean, just a few kilometers wide. And through this one narrow passage, 20%, yes, you heard it right, 20% of world's entire oil supply flows through every single day, which means approximately 20 million barrels every single day. Iran blocked it, and just like that, over 150 ships anchored outside, too scared to move that passage, and 15 million barrels of crude oil just sitting there, stranded in the Gulf Ocean, going nowhere. The market called it a catastrophe, and yes, they were right, because when markets open on last week Monday on March 9th, Indian markets opened and it was ugly from the first minute. Sensex crashed at 2,500 points just at its low, and Nifty slips below 23,700. Overall worth of 13 lakh crores worth of rupees gone in one session. This is because Brent crude oil, the crude oil price spiked to $119 a barrel, and India VIX, the volatility index, which jumped over 40% in the single week. You can understand the panic in the market from this volatility index, and it felt like everyone pressed the sell button at the same time. But here's the thing, Monday was actually the least bad day of the week. On Tuesday, Iran's brand new supreme leader gives his very first public speech, and what did he say? He said, and I quote, "The strait stays closed," and he literally called it a tool to pressure the enemy. Oil jumped again. Wednesday, Iran attacks more ships in the Gulf. The US military responds by destroying 16 Iranian vessels near the strait, and then Trump comes out and threatens like death, fire and fury, and in Iran fires back like not even 1 liter of oil will leave until the attack stops. So now both sides are digging in, right? So, and after that, on around Thursday, a US military aircraft goes down in Iraq. Then again, Brent crude crosses over $100, and while all of this happens, the IEA tried to calm things down, announcing an emergency release of 4 million barrels of oil reserves. You know what market did to that? Completely ignored it. And then the Friday, to just put a cherry on the top, India's inflation data drops. CPI comes in at 3.2%. That's from 2.74 in January. Sharp jump. That single data point was enough to seal the nail in the coffin, to put a final nail in the coffin, you can say. Sensex crashed to 1,500 points and Nifty closes at 23,151. Oh, what a rough week. Okay, so now this is the part I really want you to pay attention to, because a lot of people are saying like, oh, the markets fall because of the war, but that's too simple, right? Isn't it? The real question is, why did this war hit India this hard specifically? So let me break it down. Let me connect the dots for you. Dot 1, oil. See, India is not like the US or Europe. We import nearly 85% of our crude oil, and the 90% of our LPG comes through the Strait of Hormuz. So when oil crosses $100, our import bill doesn't just go up a little, it explodes overnight, which means billions of dollars have to leave India just to pay for the same amount of oil we were buying before. And dollars leaving India in huge amounts, what happens to the rupee? It falls. Which brings me to the dot 2. Dot 2 is the depreciation of the rupee. Pulls up the chart. You can pull up the chart of the rupee in the trading view and just look at it. In August 2025, $1 was worth 86 rupees. It was buying 86 rupees. This week, it's 92.5. That's a record low. Now here where it gets really dangerous, because this becomes a vicious cycle. Weaker rupee means every import bill gets more expensive, and more expensive imports push inflation higher, and then higher inflation means RBI cannot cut interest rates to support the economy. So the government hands are a little tied and India is essentially trapped. So the next dot 3 is, this one genuinely actually surprised me also, because normally right, gold, whenever the crisis hits, the investors panic and they run to gold as a safe haven. We saw it during the COVID, the Ukraine war, but this time gold spiked only to $5,100 briefly for a time and then just fell back to 5,000 again. Why isn't gold rallying when there is much fear or panic in the market? The answer is the strong US dollar. Dollar is surging right now, and because gold is priced in dollars, when the dollar gets stronger and stronger, gold actually gets more suppressed. So the very same force that is destroying the rupee, it's also stopping the gold from protecting you. So genuinely, to be honest, there is nowhere to hide right now, and that feeds straight into dot 4. Dot 4 is the FII selling. So foreign investors, I already made a video about how FII selling will affect the impact. So foreign investors looked at this whole picture: oil rising, rupee crashing, inflation going up, RBI can't cut rates, dollar getting stronger. They just ran, not slowly, they ran hard. In March alone, in just 13 days of March, FII sold a whopping 56,883 crores. Now let me put that in context for you. When August 2025, the worst month before, was around 46,900 crores, and this January 2026, 41,400. This March has already blown every single month in recent history, and we are not even halfway through it. And look, I have said this before on this channel, every single time FII sell at this kind of scale, the market collapses every time. No exceptions, and this week was also no different. I will put the link in the description for that video also if you want to know how much it will affect the market. So all of this chaos, where does that leave us technically? Because the charts were telling a very clear story. Nifty is below every single moving average, like 20 moving average, 50, 100, 200, all of them were broken. So when you see those kind of weakness in the market, that's not a correction anymore, that's technically a broken market. So you can say we can see the next level everyone is watching, the next support level, key support level is 22,800. If that breaks, honestly, there is very little stopping a move towards 21,000. And just to zoom out all of these chaotic events, India's total market cap is down 20% year to date, and that's $4.77 trillion worth of listed companies. The steep Nifty IT also entered a bear territory, 20% drop down since January. That's the steepest one since 2008. So we have heard so much of things, and what are the things that are happening in the market, how it's affecting the market. So right now, if you ask me what we can do actually watch the next week? Three things. Write these things down. Number one, anything coming out of Hormuz, any ceasefire signal, any reopening news, even a rumor. I want you to remember, just the rumor of G7 releasing reserves sent Sensex up 800 points, we believe, in one single session on Monday. Maybe, possibly. And that's how the sensitive market is right now. And good news, it will move fast. And this is related to the news also. And number two is the crude oil, and point is 100. Above $100, Nifty bleeds, and below $100, relief rally will start. Check Brent crude every single morning before India markets open. Make it a habit this week. And number three is the US dollar. Watch the US dollar index, because right now the one number which controls everything is the dollar. If dollar eases, rupee recovers, and gold can finally rally. FII selling slows down, will slow down, and markets get some breathing room. It is really that connected. So to bring it all together, like one war, one straight, and one choke point, and it set off a chain reaction that crashed the rupee into a record low, triggered the worst FII selling we have seen in the recent history, technically broke the Nifty chart away, and even shut the door on gold as a safe haven. And everything, this was connected, this week was connected. And that's all from my side today, guys. If this breakdown helped you make sense of what's been happening, please share it right now. Someone in your contact or someone in your family group who who worries about their market portfolio getting down and panicking, so they can know why it is happening and what can be the possible thing that they can do to be a well-informed investor. So everything in this video as for the information purpose, so you can understand before investing, like how you can understand how the markets will be moved because of the geopolitical tensions and all of the news, how the gold is connected with the dollar, and everything is connected. So hope you learned something today valuable. So if you like this, please subscribe to our channel Logic and AS. Thank you. Bye.